Good afternoon, everybody. I hope you're doing well and happy. It has just gone noon, and welcome to this week's edition of Take Stock Live. My name is Sam Evans. I'm your host of the show, and Take Stock Live is powered and brought to you by StockAbility.com. Today's date, it's June 3rd. Man, halfway through the year now, or almost halfway through the year. And my God, hasn't it gone quickly as well? I hope you're having a great day so far. If you're joining us anywhere else in the world, happy afternoon, happy evening. Hope you've been doing good so far. We are live here on Facebook, on the StockAbility channel here on Facebook Live. And we're also now simultaneously streaming on YouTube on the StockAbility channel as well. Yes, this is a live show. That means we might ball some things up. We might make some mistakes. Heck, we might even say something we shouldn't say on live broadcast. But thankfully, we're not policed quite yet. And we are here to entertain and educate and hopefully not offend. But it does mean mistakes might happen. But on the good side, it also means that if you are looking at this live, you can type in your questions. We are monitoring the viewers and the questions and the chat as it's coming in live right now as well. So feel free to let us know you're there. Send in your comments, thoughts as well. And I will be happy to address and answer those as we go. Show's going to probably run for about 45 minutes to 50 minutes or so. But if you know me and you're a regular viewer of the show, you know it probably doesn't always last that long. It sometimes lasts a little bit longer. But today, it's not going to be just me. I'm going to be joined by my regular co-host and compadre, Brian Dumaresq, will be joining us from the wonderful state of North Carolina in just a little bit as well. We got a great show lined up, really getting into this, and I think that we've been trying to tailor the show as much as we could to people who are new into trading, new into investing, and want to start kind of making some tracks in here and say maybe they don't know where to begin, maybe their journey is a frustrating one up until this point. Breathe a sigh of relief. We're here to help you. Today, our subject is going to be the traps of technical analysis. Now, you may be sitting here thinking, well, what the heck is technical analysis in the first place? We're going to talk all about what technical analysis is. It's not that complicated, but it gets more complicated as you delve deeper into it. Our goal is to keep things simple. I'm a man who likes to keep things simple. That's what we're going to do on the show. And Brian certainly likes keeping it simple. I've been loaning him long enough for that. So what we're going to do is we're going to delve into that world. And I'm going to talk to you a little bit about some of the traps to avoid if you are new into this. Great. And if you're a seasoned veteran using charts and you're just outright frustrated and don't know where to go next, hopefully we're going to help you out with that as well and simplify the journey for you. Like I said, it is June 3rd, a mixed day in the market. Let's do what we do every single week. Let's go on over to the charts. Let's see what the charts are showing us right now. S&P opened up lower today, as you can see. If we zoom in, we had a lower open on the day today. Where did we open up here? Around the price of 41.83. 41.80 was our opening price today on the S&P 500, and 71.81 to be precise. And after that major gap down, having a nice little rally. Price is really sandwiched right now between support and resistance areas. If I just zoom in on this chart and show you, you will see on here that we have a support zone that we gapped into and another resistance zone just above us. I see a little bit of weakness and disconnection in the market. We actually talked about this last week on the show. Dow Jones again on that gap up. Great little buying opportunity intraday. Do I think it's something that I want to be holding going into the weekend? No. If you remember last week, going into the holiday weekend, I was a little bit unsure of this whole area that we're seeing right now that is proving to be the current resistance. That's a big number. Highs of 42.32, unless we break that with any real clarity. And I'd want to see clean trading above 42.50 to really see a push on that thing. I expect we're going to be getting a little bit more downside on this particular market anyway. So that's the way I see it right now at the moment. Again, I think if anything, any short-term plays, you say to me, what can I do now? I think there's some profit taking to be had right in the levels of where we are in the S&P right now. And also with that gap closing up at this particular point. And again, that weakness that we're just seeing in the market, maybe a little bit of double bottom action, maybe a little bit of weakness on here. It just wouldn't surprise me to see this push lower, but not right now. Again, the numbers in point, the area in point's right around the support level. Unless we break that, we're going to hold ever. But let's mark the area of 41.50 right now on there so we can all see that this is the line in the sand. This is the price to be held. We break that, guys, 40.50. I reckon we've got about 100 points of move. I'm relishing down here. This is what I'm looking at. Keen 4,000 points. Nice buying opportunity. Big unfilled gap on the S&P 500 there. That's the area I'm going to be looking at in the coming weeks as well to see what we've got. But for right now, I got to say, if I was leaning on anything, I would be leaning on the short side. How does the mighty Dow Jones fare in all of this? I say mighty Dow Jones. Why do I say mighty Dow Jones on here? Let's just take those chunks of it. So much because this thing has been the monster. This is the thing that's been driving price up. But just like your S&P 500, as we zoom in here, we will see that also, once again, this resistance zone where this unfilled gap was is causing some problems. Again, sandwiches below support areas. I think a little bit more price support that we're seeing on the Dow Jones right now. In the region here of 34,000, big number, we never managed to take out 35,000. That has been the area. And again, that pressure that we're seeing on the market, a ton of pressure. I am still relishing the lower buying opportunity at 33,000 on here. I think right now, and remember, we'll always just give our opinion, and this is for educational and entertainment purposes only. I figure right now this market needs a pullback before it can push higher. That's the way I'd look at it. It needs a pullback before it can actually push higher. That's what I would say on here. That's what I'm looking at. It needs a pullback. Right now, I'd be leaning on profit taking or short sides on this. What about the NASDAQ? Now, NASDAQ has been the laggard, and you'll see what I mean by that laggard on here. Look at the gap down that we had today on the NASDAQ, and the NAS has just not managed to really retest those highs. Massive fade gap opportunity, like we call it in StockAbility here, which has just dominated the price. Ton of pressure on the downside coming on here. Right now, the market does have a little bit of an area here of support, but again, looking to this, and I gotta say, this wide open gap here really does concern me. Definite more weakness in the market. And this is what I was saying earlier on in the show about how some forces are pulling the market one way and some forces are pulling the market in the other way. That is something we should be paying attention to. That is really something we should be paying attention to on here. And that's making it hard, I feel, for these overall markets to take that combined push to the upside that we'd like to see. Again, we're not seeing it right now. No man's land is what I would call this right now. In the middle of the trading day, it being just after noon on a Thursday Eastern time, I'd be done. We've seen some serious volatility in that market today, but not really any kind of follow through either side. This is a nightmare for some traders. Unless you were buying that gap fill to the downside, I'd be sitting on your hands right now. I'm not going to be doing any more trading. I can tell you that. Finally, let's look at what we call the prints, the Russell, and see what the Russell's showing us right now. Russell, big gap down again, push down lower, big push in here. To me, Russell, just at the top of this range, massive range that we've been seeing on the Russell at the moment. I'm inherently feeling more bearish on this thing. I don't get caught into all these little areas in between. Equilibrium is at 22,000 points. That's the area. 22,000 points, 2,200 points, excuse me. I just see a ton of potential downside on this. And again, you might say, well, Sam, does that mean you're going to impact, this is going to impact as much on the other assets, on the other markets? Not so much necessarily. I feel that, the Russell's always done its own thing and it will continue to do its own thing. And that Russell, along with the NASDAQ, is not showing the strength that I would like to see, expecting this market to push higher. It's not doing that. Again, I got to be a little bit more bearish on it at the moment, the Russell. Nonchalant about the other markets. I got to say, this whole summer doldrums can sometimes be a little bit of a problem for any trader as well. So again, short-term moves, I find the moves best captured first thing part of the day. You grab those, you're probably going to be in a much better spot. That's the broad markets. Anything happening in the other broad major markets on here? Crude oil still trying to grind higher. That big gap up in here, edging closer and closer to $70, as you can see up here. Trading right now at $68.69, just shy of $69. Highs of today were $69.20. I expect this is going to go higher. I still see $70. I know we're not far off of it and beyond. Big time frame areas that we should be looking at right now. Looking at the big monthly charts that you can see over here, you see $75 in this major resistance area. Right now, I don't want to get in front of that steam train called crude oil. Still seeing more upside on crude oil. Today, a little bit of a meh kind of day. That's just the way it's going to be. Again, playing the upside is definitely the smart way, I feel, on that. Gold. Bam, gold was due this. No surprises on gold. Are we back on the channel? What do I mean by that? Back on this channel of price action that we're seeing right here and right here. This kind of pennant, wedge, flag, whatever you want to call it, formation. Guys, look at the amount of resistance we're hitting our heads up against right now. And we've got a clear run. I'm seeing gold at least testing 18,000, probably more like 17,000 in the coming months. Wouldn't surprise me to see it. Those weekly charts do, my friends, look like a little bit of a drag. Let's zoom in here so you can see it. Tons of resistance coming in right at this particular point. I see the lower area here. What's the lows down here? 17,000. Wouldn't surprise me to see that. Gold seems to be just stuck in limbo right now. In purgatory, neither here nor there, awaiting the fate of the economy, awaiting the fate for someone to come out and say, what the hell's going on? Because, guys, there's a lot of indecision out there. And I don't know about you, but I just feel like something's looming. I don't know what it is. I'm going to talk to Brian about that in just a second. What's been dominating the news? What can we look at from a news perspective on here? Let's go take a look at the news and just see what has been in the news. And maybe we'll look at the charts of it. The big news is AMC. AMC Mania apparently has captivated Wall Street again. Apparently AMC's come out that it's looking to sell 11.55 million shares from time to time. Shares skyrocketed on AMC, 95% on Wednesday, bringing their year-to-date gains of more than $2,800. Easy, 2,800%, not dollars, 2,800%. It's easy to be a 2,800% up when you're practically worthless in the first place. I still feel that the cinema chain has hope. I do feel that there's a lot of hope on that. I still feel that, people are going to be going out in their masses and going and checking out this kind of stuff, going into the movie theaters. I know I'm itching to do it too. I hope AMC has a bounce back. However, again, the whole Reddit versus Wall Street drama continues, with the Reddit-fueled retail traders apparently waging war, betting against AMC, trying to squeeze the funds. Guys, good luck with it. They got more money than you. They'll always have more money than you. And guess what? They can afford to take a massive hit and carry on. You take a massive hit, your career's over. Be careful what you do. Hey, call me dull, call me boring. I don't give a damn. The point is this. That is not something I'd recommend anybody jumping into right now. You want to get involved in AMC? There's safe ways to do it. Be smart about what you do. There's markets ticking along all the time. I'm not getting involved in that. In my opinion, nothing's changing. Wall Street always wins in the end. The house always wins. You've heard that saying. Bond yields inch higher after two jobs reports that we've had. 10-year Treasury yields kicked up to around 1.6% on Thursday's weekly initial jobless claims dropped to another pandemic era low. And also JBS, country's largest meat producer, is getting back online after a cyber attack as well. So, again, it's nice not to see anything about coronavirus. How cool is that? That's a good thing. Joe's just saying, made money in AMC. Good, you're a braver man than me, my friend. I stay away from all that. I stick to the big markets. That's the way I do it. And if you are, be careful, be cautious. That's all I'm saying. If you are managing to make a little bit of money out of it, good. I tell you, I'd rather you be trading AMC than trading GameStop. Let's put it that way. A whole lot safer as well. Just make sure you don't get stuck in any positions on there. I just kind of like to always just do my analysis, play by the charts and see. But I'm glad to hear that, Joseph. Good to see you on the show as a regular viewer there. So when I say about playing the charts, I guess that leads me in very nicely in and out. That's the way I like it, my friend. He said that, not me. Go check the chat on Facebook Live. All right. While we're in this subject and talking about price charts, talking about all these kind of things as well, this leads me to obviously today's subject, which is, deciding, okay, technical analysis is a great thing. And you heard me just saying about how I like to use the charts, okay, to make my decisions. And that's a great thing. And how does that work out? How does that play out? And also, is that the only way to do it? Now, last week on the show, Brian and I talked about how news and charts work together. This week, I'd like to talk about technical analysis and focus purely on charts, okay? And build it in there. But before I go any further on it, let's bring my guest and let's see if he is. Now, you might need to wear your sunglasses, guys, because this man is sporting a pretty fine tan. There he is. The man with the tan, Mr. Brian Dumaresq. How are you, sir? How's it all going? You're joining us from the Carolinas. Hearing us loud and clear, my friend?
Yep, I got you.
There
I was
he is.
Frozen there for a second. We're good now, though.
But I didn't know if that was just you freezing or you kind of like pranked me there. And just like...
Yeah.
The whole thing of when I don't want to... I'm on a FaceTime call and I don't want to talk to the person. I'm like... I got a bad connect. I have a bad... sorry, I got to go. Bang.
You did that to me. You did that to me yesterday, didn't you?
I know. It never gets old,
No,
does
kidding.
it? It never
I'm
gets
kidding.
old.
No.
Looking well and healthy, my friend. Obviously, the Carolinas are treating you okay and stuff. Last week great to have you back again. Thank you for being here, my friend.
Yeah, great to see you,
Shout
buddy.
out to Dana Joyce, just joined us as well. Now we're getting viewers across Facebook. We're getting viewers across YouTube. Love the support. Last week on the show, we were discussing price versus news. How many people get trapped into it? And again, you were sharing some of the knowledge of, your own experience of what you do and all of this as well, what you saw on the floors. I thought we'd carry on that conversation now and talk about, well, okay, we came to the conclusion, just you and I, that if you're going to be definitely a short to medium term trader, you need to really focus on those price charts to help you time. I mean, that's just a fact, right? Also, we decided that, if you want to use the news and the fundamentals, that's perfectly fine too. However, you obviously still need to time it with using price charts, right? So that was kind of the conclusion we came to. anyone looking at the show. So I guess I thought this week, let's talk about then the price charts, the art of technical analysis, because there's a wonderful thing it is. It's full of traps, a ton of traps. So anyone new on the show right now, you're thinking, well, what is this technical analysis that he's talking about? Brian Mino, you're my guest. Tell our viewers, how would you describe technical analysis itself?
Well, when I think of technical analysis, number one, you can look at price action.
Price action.
Okay, number one. All right, that's the way I look at it. Reading. I use candlestick charts. People might use line charts or whatever. Whatever, makes you happy or whatever you understand. That's perfectly fine. That's kind of how I use it, because with technical analysis, that's where the truth lies. The price action.
And this is what you're talking about here. Charts like I show on there. Candlestick charts, reading the price from a technical analysis. Yeah, that's the truth of the price. Yeah. Okay, cool.
Yeah, exactly. Yeah. So this is where you're going to find the high quality areas. You're going to understand order flow, if you want to call it that. And it's going to put you in the best area to enter with your risk in the right spot, or where you could gauge how much risk you want to take, or the least amount you want to take, or the most you want to take, or whatever it may be. So those areas are really perfect for you to do that, where a lot of people that you come across don't even know what technical analysis, they don't even know what fundamental analysis. They go off of tips from people, and it is randomly by. They have no idea what they're looking at. But if you're serious about this and you want to go to the next level, you need to understand technical analysis, because we don't have the information that these big institutions have. The JP Morgans of the world, hedge funds, mutual funds, pension funds, they understand the economics, they understand the fundamentals, they understand all that stuff. We just need to understand the technical part of it, okay, and find these high quality areas, okay?
And it's daunting for people, isn't it, as well? Because a lot of people, when I've spoken over the years, they're like, and I tell them what I do, and they're, well, how do you make a decision? I'm like, well, I use the charts. They're like, well, that's it. What about the news? What about all that other information? I'm like, well, you need that, because like you just said, you were talking about the banks and the funds and these big institutions, they can afford to take hits that the average retail trader and investor can't take as well. They can afford to be sloppy, right, on entries. Yeah. Do you feel that technicals give us, if we use it right, a little bit more precision, a little bit more safety? Is that another way of good looking at it?
Yes. And like I said, we're amateurs, okay? And I mean that, not to disrespect anybody, because we're looking at technical analysis, and technical analysis really helps us eliminate the white noise of the news.
I like that.
Because the news could be persuasive. Okay. The news could be persuasive. If you watch CNBC or any of these channels, whatever, and when everybody's singing Kumbaya and everything's great in the world, you might want to think about, okay, we might be a little top heavy here. Yeah. I might want to get out of some longs, or, look for a quality area to short or something like that. Okay. But it helps you eliminate a lot of that white noise and focus in on what the truth is. Yeah. Like I said, the technicals are all about people who are buying and selling it, and they leave behind a footprint on what you should be looking for and how to trade the markets, very carefully, if you want to call it that. Okay. Where you want to enter, like I said before, as an amateur or a retail trader, you basically are all about controlling your risk, finding these high quality areas where you can control your risk. And the technicals are the ones that are going to help you do that. I've had people in the past say, well, I bought XYZ because I heard a rumor or whatever, but I'm going to put a 5% stop loss on it. Well, why would you do that? Like, you don't know where you're buying it, why you're buying it. If you take that information, you can go home and look at a chart. And if you understand how the technicals work, okay, here's a high quality entry zone. You know what? I think this is going to come in, 5, 6 points, whatever it may be. I want to enter it here. My stop's going to be below here. Now I have a system to follow. Now I know what I'm looking for. The technicals keep you in control, I guess.
I agree with that.
They help you manage.
That,
they help you manage your money. They help you manage your. Like I said, I think Ryan said one day, he said it great, and he goes, well, "Look, we're not traders. We are risk managers. Is really what we are, and that's what it comes down to. And proper risk comes off of understanding how the technicals work."
Yes.
Okay.
Yeah, it really does. And I think for me, it does make sense of all of the information out there. Like we talked about last week, there's so much information out there, it can be really overwhelming. And, you said as an amateur, I think no matter what level, if you're a rank beginner and you've never ever done this before, it's overwhelming. Right. Even to me, after nearly 18 years in the business, it's overwhelming. There's so much information, right? I wouldn't
Yeah.
know where to turn. I wouldn't know where to turn. So at least I know with the technicals and the charts roughly where I can get in, where I can get out, what kind of risk, where it might go. I mean, that's another thing I find a lot of investors fall short on, Brian, as well, is because they're so unfamiliar with the charts and the technicals, when they buy and hold, they don't have any realistic way of managing the trade and maximizing their profit potential, do they? Because they're just
No.
holding it. Like, they might not even know that they're coming into a real significant area. All they see is, green on their screen. All they see is profit. But what they don't realize is they're hitting an area that maybe 10 years ago had a ton of resistance out there. And there was a ton of sellers. And there's a good chance that some of those sellers may be there now. Not the same people, but it's a benchmark. It's like an anchor, a
Right.
reference point. So it might make sense for them to say, I might take a little bit of profit or take something off the table here and protect it. They don't know. And then the next thing, bang, they give a chunk of it back. I see that a lot. Have you seen that a lot with people as well? When this lack
All
of
the time.
awareness?
All the time. And that's because they're letting emotions run, or,
Yeah,
well, it's a buy and hold. Oh, it's going to come back. It's going to come back. But you know what, though? What happens if you owned Enron? Enron was $100 and something dollar, oil company, what,
right.
10, 15 years ago? Oh, no, actually 20 years. Jeez. Yeah, about 20, 15, 18 years ago. They're
Yeah,
no
it's a
longer
long
in business.
time.
So if that was a buy and hold, say goodbye to all your money.
Yeah.
Okay, even like last week when we were talking about Tilray, when you bought at $300, now it's at 18. You're gonna be waiting there a long time. Okay,
And there's the one,
that's
yeah,
the problem now, and people
Lehman
are so
Brothers.
scared because people don't have a system or a plan or don't understand what they're doing.
Yeah,
Everyone's going for the grand slam. Everyone's saying, I'm going to buy it because I know it's going to 1,000 or whatever it is.
yeah.
They don't know how to like sell it, pay themselves, and then, sell it, let the rest of your money run or whatever. Maybe it's, you take your principal back in, you can look for another opportunity, let your profits run type of deal. I mean, there's different ways of managing your trades, but people are scared to sell because they're afraid that, oh, if I sell it at $20, next thing you know, it's going to go to 100,
And you talk about
you
those
know,
emotions. Those emotions, not to be a
100%.
not to be a cliche, but those emotions of fear and greed.
Oh, big time.
Right, you see them in
Big
these.
time.
You see them in these price charts all the time. I mean, this is fear and greed. I mean, I look at this candle on gold right now. Where did we open today? Let's just look at the numbers so you can see. We opened today on gold at, let's just see on here, 1893 and change. Right now, we're down to 1866. Okay, so we've had a big $30 plus sell off on here. You see a big red candle like that? That's just fear talking right now. People dumping. You see it. But then that's where you got to be on the
Yep.
right side of it, because that could be a really nice buying opportunity. I mean, even for a short term right now, I got to say, there's an opportunity for a cheap buy, and I know that if it holds this area here, there's a really good chance it might take a little pop back up again. Unless I was looking at a chart, how would I know that? All I'd be looking at is P&L on my screen, on my app, going, oh, I'm losing. And even if I was a buy and hold on gold right now and seeing that $30 sell off today and panicking about it, Brian, really panicking about it and being all uncomfortable about it, maybe had a bit of an understanding, of knowing where we're at now might help calm my temperament and say, actually, you know what, I can afford now to give it a chance to maybe rally from this point, right? It could save you from then getting out of it at the wrong time as well, right? I mean,
Yeah,
there's
yeah,
two sides of it. There are two sides of it. I guess the
yeah.
question would be, Brian, before we go back over to the charts, and I've had this a lot, right? How much of it is voodoo? Like, people can't get, they'll go, dude, that's voodoo, man. Right? And I'm like, what do you mean? I'm like, no, that's voodoo. I mean, look at the charts. I mean, come on. And it's like, to me, it's not voodoo. To me, it ain't voodoo. To me, it's reality. It's as far from voodoo as we get. That's what's happening on this chart right now. What I'm showing you here, that's what's going on. I'll point this way, but that there is what's going on right now on that chart right now, right? So how can that be voodoo? Now, is there an element of self-fulfilling prophecy if enough people are reading charts and taking action based on the charts? Is there self-fulfilling prophecy in all of this, Brian? I mean, is that an aspect of this we witness?
Well, okay. So before I answer, I must say I got to give you kudos because last week
Oh, sorry.
you did say last week was you took the put side.
Yeah.
and you said that gold looked like it was going to come in a little bit here.
Yeah.
So I think you almost nailed the top of that range before we had that big move down today.
All right,
So
so I appreciate you saying that, right? So I think
right,
let's look at the charts a minute, okay. And you know what? I remember now. I should keep more of a note of this because I remember
yeah,
I've actually got it written down on my charts here. Yeah, there you go. It was gold. I was on my downsides. I was looking. Look, I'm going out the screen here.
yeah,
But
yeah.
why did I say that? The reason I said that is because of these. The reason I said that is because, I look at charts like these, right? And I look at the chart on the top right-hand side here. I'll zoom in for everybody so you can all see it. And look, I'm going behind the screen here, so unprofessional. But look at this, right? I'm all over the place. But look, that's what I'm saying. Like, there was resistance there on that chart right now. We can see, So again, to me, it's not voodoo. To me, it's, that's what the price is telling me. And I think what a lot of people struggle with is just giving in and just letting that go and saying it. But let's go back to it. Voodoo, self-fulfilling prophecy. Thank you for the kudos, Brian. What's your take on it, my friend? What's your thoughts on it? Tell me.
On the charts?
Yeah. Is it
On
voodoo?
this whole
Is
thing?
it just self-fulfilling prophecy? Is it too good to be true?
Well, look, technical analysis and any type of trading in general, you're not going to be right 100% of the times. We're just trying to find areas that we know we're going to have a pretty good chance of being successful on our trade. And then it comes back to managing our risk. So is it voodoo or, anything else? No, it's just that we are finding high quality areas to trade off of. Hey, look, you're going to get stopped out. That's part of your business. That's part of managing your risk.
Yeah.
Okay. But then also when you have a winning trade, how are you going to manage that? You can't all of a sudden have, these thoughts of, oh, I bought it, it's going to the moon. All right. You got to stick to your system and get out when you're supposed to. Okay.
Right.
Don't, once you're in a trade, don't start moving your targets. Don't start doing that or whatever. So I like I said, honestly, it's more about understanding how the charts work, and there's no voodoo. Is there a little bit of luck involved? Sometimes, you might have, maybe a company gets bought out overnight or something. It gaps up and you're right on the right side of the trade and you're like, oh, home run, see you later.
Isn't there luck in everything in life?
Absolutely. 100%. 100%. 100%.
Sometimes some people get lucky with the person they marry. Sometimes they don't.
Yeah.
Right.
Yeah. 100. Yeah.
So, I mean,
divorce rate.
There's right place, right time. Like I know a friend of a friend who has got, I think, something like, believe it or not, like it might be 0.5% ownership of Apple from the early days, like worked there and was gifted a tiny piece of equity, did kind of a job in it in the early days kind of thing. And I've never met this guy. It's like a friend of a friend of a friend even. But it was a regular gig, working on some things. They said, look, we can pay you X amount, but hey, if you work on this project to help us, we'll give you, it might even be 0.25%. It might be less. Who cares, man? I mean, you'd want that stake, right? He could have took 0.5% equity in another company and it'd be worth like $10 right now. You don't know or nothing. There's a little bit of it. But I also believe the more you put yourself out there, the more you do things over and over and over again, luck starts to, luck is also the reward of hard work, i.e. it can be hard.
Yep, I was just going to say that. Yep.
Right? It can be hard work to read charts objectively. Like, I know that, my craft is a 15-year craft, 18-year craft, whatever you want to call it, right? I've been doing this a long time. And now, even now, like today, I look at the charts today and I actually took today off. I didn't do anything today. I had other things going on. And I looked at the chart and I was like, today would have been a crappy day for me because my trap entry would have missed by a couple of ticks. Then it overshot on my short and I would have been like, But I'm objective enough to know that now because I do the same thing over and over again. And I think that's what pure technical analysis really is if you use it with consistency, if you use it objectively, and you put the hard work in, then I think it's such an amazing tool. Like, I couldn't live without it. Let's put it that way. And I don't believe in the whole self-fulfilling prophecy. Yes, I do. But here's the thing. If enough people do something at the same time, it's going to have an impact. But what the problem is with a lot of retail traders, and you and I both know this, Brian, is too many people, they change their plan over and over and over and over. Me, I am a boring man who just does the same stuff every day. You don't believe me? Guys, go into our guided trade sessions. Join our community. Graham, Coach Ryan, Coach Dan, Coach Sam, Coach Alex, all of us. We all say the same stuff over and over and over. And we are a pretty boring bunch of records, right? And that's why I think it works. You know, that's my thought on it as well. Brian, there's a lot of different things about technical analysis. We've got chart patterns. We've got lines, support and resistance, trends. Let's talk about the traps, because I think it's amazing. The first time I discovered technical analysis, I was like, whoa, this is wonderful. I was like a little kid in the candy store, right? Then I realized, you know, it's easy to get sick if you eat too much candy. Start rotting away your teeth. It has a negative effect, right? There are a lot of traps. What kind of traps are there associated with technical analysis, in your opinion, my friend?
Well, you got the like a bull trap and a bear trap. Is that what you're talking
No, I'm
about?
talking about the traps of misleading signals. The Holy Grail syndrome. There's a lot of different tools and indicators. What kind of traps are there, you know, associated with getting too caught into it?
So basically, with technical analysis, simple is always better. Okay, because a lot of times people will find one way of trading and then all of a sudden it doesn't work that well, or they're not doing it right, or they're missing something. Then they talk to somebody else and that other person says, you got to look at the RSI, or you got to look at the Bollinger Bands, or you got to look at the moving averages, the MACD, so on and so forth. Next thing you know, they're looking at so many different things that they don't even know what they're looking at anymore. They lost their way. It's kind of like, you know, they started off having a real solid trunk of a tree. Then every time they added an indicator or something like that to their trading, okay, they branched off and they eventually lose their way. I'm not saying that, you know, indicators are a bad thing at all. I'm just saying that people a lot of times don't know how to use them correctly. Okay.
That's
And
something.
that could be detrimental to your trading. Okay. Because you don't understand how it really works. You don't understand why it was designed. And then all of a sudden they're going to be using 2 or 3 at a time. You know, the more you use, the more confused you're going to get. Okay. That's what I was saying before. You know, if I look at a chart, I can understand what the trend and support and resistance looks like. And that's how I'm going to do most of my analysis to where I want to enter, where my risk is going to be, targets, and so on and so forth. But people get caught up into that. And next thing you know, it's almost like they're traumatized by looking at their system. You know, they're paralyzed really in their trading. Well, you know, support is saying this, but the MACD is saying that, the RSI is saying that, volume is saying this, and they're looking at a couple different things. And it could be, like I said, it could really hurt you in the long run if you don't know how you're using. Look, I'm not, like I said, I'm not against using that stuff, but you just kind of don't understand how to use it and don't overcomplicate it. That's one of the biggest problems we have.
Well, I think a lot of people, I love what you're saying. Couldn't agree more. I think a lot of people make it too complicated, right? And there's an old saying, you know, it's, I'll write it on the thing here. KISS. Yep. Keep it simple, stupid, right? That's it. That's how you have to be with your charts, with your trading. And I feel that you can see more on a price chart when you strip it down to its bare bones. Like, I always called this naked trading. Okay, naked trading. And by the way, questions, comments coming in right now. I'll address those in just a second. Thank you so much, Brian, Luis, Joseph, Amit. Great to see you on the show, Dana and everything. I'll address those, get those questions in just a little bit. But while we're on this, I mean, yeah, it's I feel like I can see more by having less on the screen. Okay? Because to me, I think the biggest trap, if we're to really talk about, and let's write it on here, what is the biggest trap of technical analysis? I think that number one, using too many different tools, and tools can be patterns and techniques. And number two is technical indicators. Like, I just wrote an article about this. The most recent article I just released, subscribers to our newsletter will know this. It's just gone in the archives. I'll pull it up for you a little bit if I have time in a little bit. But it was called, you know, the traps of technical indicators. And I talked about Bollinger Bands. And let's go take a look at Bollinger Bands together, Brian. And I'll show you, because I'm going to go over to here and I'm going to click on this little button that says studies. And I'm going to add a study on here. All studies. Let's go to B. And here we go. Look, there's only just one Bollinger Band. You've got Bollinger Bands, Bollinger Band crossovers, Bollinger Band bandwidth, Bollinger percent B. It's like, do me a favor. Let's just put old-fashioned Bollinger Bands on here. And reset my chart so you can see it. And there's the Bollinger Bands right now, Brian. Now you can see I've got these two bands on here, okay? Upper band, lower band, mid band. Now, what the Bollinger Bands suggest to us is right now, so we just zoom in here. This green line here is your moving average. It's a 20-period moving average. That's your average price over a given 20-period time. The lower band is -2 standard deviations. The upper band is +2 standard deviations of the moving average. Man, I sound smart like I know what I'm talking about, okay? I rehearse this. Don't get carried away. Now, point is, I got a cue card just in front of me right here. All jokes aside, what this does is it gives me, the Bollinger Band gives me a projected range of price of, based on the current prices, how far up or down could it potentially go. All right, that's what it does. So these bands, like here, if you take a look at, like now, you can see we've got a pierce right here on the upper band. Now that is giving me a potential sell signal because we are stretched quite far away from our mean. Very useful. Here we had a potential buy signal, and you can see that the price went up from that particular point. We had another potential signal here that worked out really good. But you're also going to see that here, you got tons of sell signals, but they didn't really work, did they? You know what I mean? So you get all these multiple signals. And look at here. Buy signals here, buy signals here. None of that. Let me move my head out of the way. None of those worked. None of those signals worked. Why is that? Because it's not infallible, is it? It's just an idea. And the problem with all these technical indicators, I find, is that technical indicator is only going to give you a signal based on the price. Well, already right now, you know, you could be getting a sell signal, but you had to start going down to get the sell signal. The best traders I meet, Brian, they're already in it before it starts going down. Like I could already see last week on gold, when we were on the show, whenever it was, a couple of weeks ago, I said, get ready for a bit of a push on gold to the downside. My whole reason for that was I was hitting price resistance, which is the number one tell for me. Well, if I'm waiting for a Bollinger Band close, I'm getting into it now. Well, if I get into it now, I'm not saying that might not work. We could get into it now. But I've sacrificed about, what, $30 of profit on that? I could already have some profit in here and a much better point. Have you ever fallen into those traps of relying on what we call that holy grail, where you feel that technical indicator is the be-all and end-all, Brian? I mean, because I did. There's so many out there. What's your experience with it, mate?
You know what? I was like everybody else when you first start off. You learn how to trade. Even though I had a very I had like a master's degree of education, if you want to call it that, working on the Ford New York Stock Exchange.
Yes.
But that was a totally different animal. When I had to go home and sit in front of a computer by myself, it was like, what am I doing? What am I looking at? All right, I need to relearn this type of deal. And then once I, started to understand how candlesticks work and I could apply it together, but I'm like everybody else, curious.
Right.
What are these indicators? Volume, RSI, MACD, stochastics, all that type of stuff. And I experimented, but at the end of the day, I felt that it was doing me a disservice than anything else. So that's when I kind of eliminated it. And that was years ago. I still look at a couple things every now and then, but they're not part of my daily routine or things that I rely on. Right. Like I said, I rely pretty much just on price action now. And that's the one thing that really helps me out. Hey, look, there are people out there who trade with certain indicators and are very successful. I'm not, like I said, I'll say it again. I'm not saying not to do it, but just understand how they work.
Right. And what concept. I mean, if you like what I talk about here in my latest article, I was like, here's the right way to use it. I don't blindly take a Bollinger Band signal without anything else. I'll take a signal when I have some substantial evidence to support that signal, like a price. I'll take a technical signal if it's bolstered by a price signal, because price action is the key, right? What also, I think you agree, man. What also is the problem for anybody looking at the show right now is don't fall into the trap. Like, so this is on this platform here. You go put a couple of $100 in an account, get the trading account, don't even trade, start playing around with it. You get this great account. This is Thinkorswim's platform. Love this platform, by the way. It's one of my favorites out there. It's one of the main ones I use. But, you put a bit of money in the account, you start trading, right? And you're like, oh, look at all these shiny new tools, right? So I go to here and I can look at patterns and studies. Just look at the studies button. Add study. Just take a look at all of these. And then you've got David Elliott studies, the FWCCI Advanced, Basic, Mobo, Fisher Transformer, Mobo Basic, John Pearson PMCs, Pearson Pivots, LBR studies, lower studies. I mean, moving averages. Look at all the different moving averages you've got. Wilder smoothing, variable, simple, stock bands, ribbon study. I don't even have a clue what any of these are, Brian. And the problem is this,
Oh,
is how valuable are they if they're all in your platform for free? That's my question to someone, right? If they are the holy grail of trading success and they're all in your platform, you don't have to pay to use them. You just open your account and you start doing that. If that's the case, how valuable are they, Brian, if they're all free for you to just put on your chart? That's the question that you got to ask yourself,
not,
right?
yeah, exactly. Not very.
I mean, it's very easy to just, it's just easy to kick out. I take that off. I would say this, decision support tool. You like that, Brian? That's what they should be to me, is a decision support tool. I think if you use them as a way to have a system, and we talk, I know you've talked a lot about this, and maybe we could spend a bit of time doing this, but system over strategy anyway, right? Like for
Yeah,
me, I don't even care about an indicator signal unless I understand the difference between a static and a dynamic trend, big picture, small picture. Price
correct.
targets. Like there could be a trade setup with a buy, but there's no profit. So I might say, yeah, not worth it, right? It's almost, that all comes well before the indicator. Maybe an indicator's a trigger, maybe an indicator's a trigger of some kind or something. What's the best use of a technical indicator that you've seen in your history? For anybody wondering. Well, I still would like to investigate them. What would you say is the best use you've seen of them, Brian?
Like, which one have I used?
Or what's the
And
best use you've seen of any of them? It doesn't matter so much. Or what have you used as well that you found has been useful?
I mean, I've always looked at every now and then if I look at something, I'll look at the RSI.
The
I'll
RSI.
look for things that, extended one way or another, overbought or oversold. But I don't do it all the time, and sometimes people use that the wrong way as well. Okay. They might look at it on a 5 minute chart or something like that. Nah, I'd rather look at a larger time frame because I want big picture.
Right.
Okay. I don't want to start trading on the smaller time frames, get caught in the weeds, because that is just going to destroy your account. And keep in mind too, if you're going to do this and you want to have longevity in it, you need a consistent system that you could follow. Okay.
Right. Right.
Because if one day you can look at RSI, tomorrow you can look at MACD, and then third day you can look at Bollinger Bands, whatever it is, you might as well just close up shop because you are basically guessing. All right, and you have no idea. It's gambling, actually, is what you're doing
Well,
when you do that.
what you're becoming is you're getting away from it. You're a food truck who started out selling burgers, and then you're like, well, I'm going to sell pizzas,
Yeah,
and tomorrow I'm going to sell gyros, and the next day I'm going to sell croissants. It's like, dude, make your mind up. You're never going to make any money. You're not going to get good at anything, right?
yeah, yeah, and that's what it comes back to: back testing, logging your trades, understanding what works with you. I mean, look, it's not gonna like nobody's gonna tell you because everybody's wired differently
Yes.
emotionally. Their bank accounts are different. Everything is different about everybody, and everyone's gonna have their own way of doing things. That's perfectly fine. Okay, but you must have a set of rules to follow every day. If you
Sure.
show up every day and you do something different, you're gambling, you're going to be done. It's going to be even though you're taking small losses, like, oh, I bought it today with a 5% stop loss, but you're not using technical analysis to understand where those high quality entry points are. It's going to be death by 1,000 cuts. Okay. You're not going to blow up your account that day, but you will over time
And
because you got nothing to fall back on.
that's painful. And not only is it painful, it's mentally draining. I was talking about this yesterday. It
Oh, every
is
day.
draining. I can tell everybody on the show right now, if you're looking at this, this has been the hardest thing I've ever done in my life, and it's also been one of the most rewarding things. But one of the most rewarding things is overcoming the personal obstacles, the challenges, and the things that you have to go through. I mean, unfortunately, a lot of it we bring upon ourselves. We make it complicated. It's just one of those things, and it will drain you, man. It will kill you. It will suck the life out of you. And I don't want to make it all like, doom and gloom. But I mean, there's doctors who love their job, but they're doing like sometimes 18-hour shifts. They feel like they're down and trodden, and police officers who love what they do, but they see certain things they can't unsee. Every career and job has its pluses and
Yeah, it's
minuses,
it's
and
yeah.
this can
Every profession has it.
and this can be mentally destroying. But again, you can control that, and that's why. Back to this thing, if there's one message anybody looking at the show can take from us today, it's you have to keep it simple. We don't bullshit people at StockAbility. We don't. We're all about just keep it real, keep it as it is, and you got to hold yourself accountable. There's no magic, quick, easy fix with any of this as well. Joe's just saying that divergence, great, nice tool. Yeah, you were talking about the RSI. I'd agree with you, actually. I'd agree with you. Just bringing this up, and then we'll get over to your call, my put. You mentioned about the RSI. You got a nice sell signal here in the RSI. One of my favorite tools of variation is the stochastics. I like the slow stochastics, But the RSI, nice relative strength indicator, showing whether a market's looking strong, weak, overbought, oversold. Can kind of see it on this chart here, Looking at this, you got a great sell signal, Brian, on the chart right around here. But again, you're not going to blindly take it, because if you take every blind signal without some kind of backup, that's not good. Kind of like this, because here, when we got this region of selling, at least we were coming into some good areas here where there was a price gap here when we had
exactly
the selling activity here signal coming into a nice resistance area again. The charts are going to tell you that. I've seen people try strategies where they've took the candles off and just took the buy and sell signals off the indicator to try and automate it. And guess what? It didn't work for them. You need that confluence. You need that extra layer of support. So, and I like the
100%.
And the divergence, convergence thing, that can work out really good as well to a degree. But even that has its limitations. Like I could say, one of my former colleagues was a big fan of divergence and convergence as well. Again, great, but you have to have other factors to support it, And I always say this: you can take away every indicator and every chart pattern, but if you take away and still trade just fine. But if you take away the price, you're done. Price is the only thing you'll ever need, And some people feel comfortable with that, and some people don't. It's all about personal choice. I think my final advice to anybody on here, anybody really considering this and doing this and getting into this and really want to get into technical analysis, just look on a couple of things. First, learn the basics, support resistance. In our trading and investing orientation program, what we do is we focus on the basics: support, resistance, trend. I find that's more than enough. You go again, master the basics and see if those other technical indicators and patterns are going to help you. Me personally, the stuff I use is proprietary to me. It's all based on price. That's my personal preference. On this show, like you said, Brian, I'll back you up on it. I'm not here to say it doesn't work. What I'm here to say is just most people don't work. That's the problem. It's not the tools, it's the people.
Yeah.
A saw's perfectly fine as long as you don't cut your hand off, right? It's not the problem. So again, I think it's stripping it back today. Great subject, great topic on here as well. Really like this. Ben Calhoun, nice to see you. Phil Jackson, there's my man. Just joined us as well, looking at the show. I think a few people were confused, Brian, because last week we did the show on the Friday. Now we're back to our regular Thursday. So, or was it the week before? I don't know. I'm tired today.
I don't remember either.
I'm all over the place. I'm coming off the holiday weekend. My little boy hasn't been sleeping too well. Last night he went back through the night, and I've been spoiled since day one with that kid because he's a great sleeper. Jacob, I love you, darling. You're the greatest thing in my life. But suddenly, the last couple of weeks, she stopped sleeping, and he went through the night last night. And I had such a good night's sleep last night, I haven't woken up. So I'm all a bit like, I still want to go back to bed again. Sometimes a good night's sleep is the worst thing for you as well. Brian, it wouldn't be TakeStock. Thank you for that great discussion. Anybody got comments, thoughts, or questions? Reach out to us. You know where to find us. Support StockAbility. Go to the website. Reach out to us. We're more than happy to take your calls, take your emails, and chat more with us as well. I would say this, by the way, before we do your call, my put, what I was just talking about was if you are looking at the show right now and you're saying to yourself, hey, you know what? I do want to find out a little bit more. I love what you're talking about. Here's the place to do it, Brian. I'm just going to kind of take you out of it for just a second and just go over to the chart so you can see it. StockAbility.com is the power behind TakeStock Live on here. Head on down to there. You can call us at this number. You can chat to Rosie. She ain't a robot the last time I checked. Yes, that's a real person who's there to listen and talk to you. You can register for our free webinar, which is an on-demand webinar you can look at in your own time. That's kind of cool as well. You haven't got to be there at a certain time or place. We live in a world of instantaneous. Man, click the button. We have our register for our free webinar on there as well. And also, again, you can register for our live ones. We have our on-demand webinar here. And also, guys, down at the bottom here, you can register for our upcoming live webinars as well. Right down at the bottom here. Next one we've got is Can You Afford to Retire with the amazing Ryan Watkins on June 8th at 12 p.m. Eastern. Then Alexander Perner, our head of Forex, is going to be doing another one with us on June 22nd at 5 p.m. Eastern, a pure focus on Forex and Forex line. Alexander Perner, what a young talent. What a guy. Love that. And then I'm doing another one here, another complimentary. Yours truly will be hosting on July 13th, the path to becoming a funded trader. You don't have the money to trade? not a problem. I'm going to talk to you about how you can get the money to trade, how you can start entering the big leagues and do it safely with some real good backing to help you as well. We're going to be talking all about that as well. They are the live webinars of different subjects. Also, our general webinar is available for download or for view right now on the free webinar. And if you're really interested in saying, well, I don't know what I want to do next, just go over to our education page. Everything we do is all on there. Not sure where to begin? Click on the programs button right here. Take our short quiz right there. Click on that and that will tell you about what programs we feel might be right for you. Hey, you might end up talking to Brian. He might be able to help you. He is our student momentum coach after all. Brian, let's get back to the charts, my friend. Your call, my put. What do you want to do?
I'll do a call.
You're going to do a call?
Okay.
For anyone like that means he's bullish. That means he thinks something's going up. What you got for me today, my friend?
Bullish. All right, so the XLV, the healthcare ETF.
Now, that's an ETF, XLV, right? You know how I remember XLV? Do you know how I actually remember that? V for virus. That's how I remember it's the healthcare one. How bizarre is that? That's probably why they did it as well. But that's how I actually remember it.
Yeah, could be.
There we go. Oh my God. I would hope that this is a call because my gosh, look at this market right here. Look at this market right here. Man, we are in an upward trend on that. On the monthlies, on the weeklies, on the dailies. Now, this is where people get deceived though. Taking a look at this 15-minute chart right here. This is where people get a little bit confused, isn't it? Because then they look at these small time frames that we've got right here. Let's go to a 1 hour chart. And then you're seeing a little bit of weakness in them. I go, oh, the trend is down. What are you thinking? You're thinking on the upside, Brian. What time frame should we look at, my friend?
I was looking at the daily chart.
All right, let's bring up the daily chart. Let's see what we got.
The 119, 118 area, I think, is a pretty good support zone.
I tell you, look at this, and you can really see there is a lovely uptrend. I mean, that's a beautiful uptrend still. You know, places I've been involved with before, they used to discredit trend a little bit. And I was just like, you can't discredit trend. It's called a trend for a reason, right? Trends do continue. They do bend. I always say the trend is your friend until the bend at the end. But until the bend at the end, you might as well play the friend, right? So, and at the moment, I haven't seen a significant bend in this, right? So you're looking probably around this area here. Would that be right, Brian? Somewhere around this? Right, let's go zoom in a little bit more for the viewers at home. Let's kind of take this to here. Let's go on to my pointer version here. Go over to here, zoom in a little bit so we can get some nice price action on there. So everybody at home can see it. I think Brian's talking around this area here. What do you like about this, Brian?
Well, if you look to the left there, it was a prior resistance area, and that's where it kind of, it broke through.
Nice.
And now when it comes back here, I think that'll be a nice area. Yeah. That I think it has a very good chance of bouncing off it.
Absolutely.
If not, I know where my stop is. You know.
Yeah, you probably want to be holding this much below 117.50, right? Because I mean, below this area here, you know, you got to zoom in and you got to take a look. And I think, yeah, I'd know I was wrong a little bit below that area there, wouldn't you? You know?
Yeah.
What about on the upside? Think this could potentially retest those highs, Brian? I mean, how much upside do we potentially have on this thing?
You know, I mean, who am I to say? But I mean, if you look at every high, every single one of them has been a higher high.
Yeah.
But I think that we could, at minimum, probably retest the most recent high, which was, I can't say 125. 124, maybe a little bit higher than that. Yeah. And I think if we go higher than that, then who knows?
That's the only quality resistance I see on that 124, ironically, because if we do get above that 124, then the resistance above that, it's not really much to really write home about, is it? I think we've got a bit of upside on that. And if there's no, I feel like these markets are going to keep rallying until we have some bad news, like really bad news, like something really like, oh man, we're in some trouble here. I don't see any reason why. Now, you're always going to get early bulls. You're always going to get early bears. You're always going to get the people who want to be the hero, right? But I got to say,
prove me wrong first. Yeah. Prove me wrong first.
I like that for a play. I'm gonna add an alert on that. I am gonna add an alert on that. It's hard at the moment, you know. I feel like some markets are coming down and there are offering some buying opportunities. They're not quite where I want them to be. That's how I generally feel right now. But there are some markets that have got a bit of weakness showing in them. I got two to talk. I might actually go with two. We're all good here. The first one, I like that, Brian. Thank you very much, sir. First one I'm going to take a look at here is, I almost hate dissing the House of Mouse. But you know what? Too far, too fast. Disney, guys. I'm bearish on Disney right now. Not long term. Let me make it clear. I'm like I say, I'm loyal to Mickey, man. You know, I don't like to fight the House of Mouse. But I gotta say that we've had a good push here. The way already this monthly candle is coming. The fact we had that big push to the downside last month, closed up high, and then we've opened. And while we're staying below this price level of around 180, which is my line in the sand around here, Brian, 180. Already you're a couple of days in. I just see room to go. I gotta just say down to around 150. I know it's crazy, but I think a pullback on Disney could be a really lovely opportunity for a nice push back to the upside on here. But I do think that, you know, a lot of people have jumped on the bandwagon, the Disney bandwagon a little bit, anticipating the parks opening and all that kind of stuff. And I am long-term bullish on Disney, but it just feels a little heavy. When I start to look at it on different time frames as well, the weekly chart, again, starting to see some weakness in this. Like, again, Brian, look, the lower lows, the lower highs, the lower low, the lower high, the lower low. There is a downward trend forming. And what I don't, this to me is not quality support. Hence, my bearishness on this market right now. And hence, I mean, look, I licked my lips down at 150. I'm really licking my lips down at 140 across here. I mean, really licking my lips here and even more down at this point. But it isn't a downward trend at the moment. It isn't a downward trend. Now, obviously, it hasn't got major highs. It's got major highs established. But for me, we're way off those highs. We didn't hold 203. 150 seems to me like the obvious equilibrium point for it to go to. I'm just trusting the price right now. I see a nice transitional area at the moment. Maybe I'm being a bit aggressive, Brian. What are your thoughts on Disney? I feel like I'm short on it right now. So
I can be honest with you. I actually do like that price target of 150.
yeah,
And I also like it as a possible long area.
I do. That's the thing. I'm not writing this up. This is a short-term short, like maybe a couple of weeks or something like that.
I 100% get it. You're a trader.
Well, that's how I look at it.
These are things you look for.
And a proactive investor as well. Oh, did I say that? I'm sure another company used to say that. Not anymore, but you know, I do want to be a proactive investor in some way, shape, or form. But like, you know, look, there is trend involved here, and at the moment, I don't even care so much about the lower highs. I care about the lower lows, and we do keep making new lows. And again, that's the trend right now. And you know, we're a bit indecisive today. There's some minor support here. I'd like to have been in a little bit higher, tough over the holiday weekend, but at the moment, I don't know. I just feel at least a dip down to this area here. I'm happy to take a little bit of exposure on that, see how it goes. Disney to me is one I'm looking at the moment. Another one I'm looking at, a little bit of weakness I'm seeing at the moment in this market. Another one that maybe pushed a little bit too far, too fast, is Lowe's as well. Lowe's obviously did really well during the pandemic. Look at the move we had on the monthly charts. You know, everybody rushing to do all those jobs at home that they never got round to doing. Life is getting back to normal again. Lowe's was a pandemic play, a little bit like Zoom. I think it's kind of done right now, and I think it's not such a bad company, not at all. I just think it's an overpriced company. I like Lowe's at 165, 160. The way it's going right now, in my guided trade session, I was calling for a break of 190 yesterday. Any of my guys in the room with me, I'm bearish on it below 190s. Again, looking at this, seeing the way it's playing out on here. Let's go over to the weekly chart. Start to see that weakness trickling, the lower low, the lower high. You can see it on here. We are literally had a massive price rejection on here at the previous weekly major numbers, and we're seeing that right now again. I don't see a lot on this chart down to about one. I'm not looking for a massive move, but first price target for me is 180. Then I'll be taking this down to about 160. Looking at it on the daily charts, again, like Disney, I'm seeing that lower low, lower high, lower low, lower high. The fact that these markets are pulling against the broad markets, I look at Lowe's, I look at Disney, their value plays, and they're showing weakness against their broad market indexes. That to me is a sign that there's a little bit more downside and weakness on these things. Those broad markets, if they come down lower, they might do it. But that's on my radar too right now. Lows on that break of 190. I think there's a bit of downside. Again, am I being too negative here, Brian? What's your thoughts, my friend?
Not at all. You know what you're doing? You're making decisions based off of what you're seeing on the chart.
Yep.
Okay, and that's the most important thing.
There. Look at those four charts. You can't really see it up here on the top left, but you see a roll over here. You see a roll over here. You see a roll over here. And anyone looking at the show right now, I'd be taking the puts on this to give myself, you know, a sloppier entry, a looser entry. but I can afford to do it. What's the worst that's going to happen on here? You know, it's just one part of the overall portfolio too. So, you know, just seeing it. There's ones I wouldn't bet against, but I like lows, and I think there's and again, I think lows would be a great buy lower, but I want lows lower. In the meantime, I'll try and take it a little bit down further as well. Listen, one thing we do on this show, ladies and gentlemen, is we're never afraid to make a call. You know, we get it right, we get it wrong. What bugs me, Brian, is too many people, they go on and they never want to be wrong. I'm wrong all the time, you know? So...
You must be married then.
10 years. So that's what I'm saying, you know, you want to be built for trading, get married. Be married for 10 years and then you'll be perfectly suited for trading, you know? So it's all good. It's all good. I'm talking about us as a man. Us men, we're not quite as thoughtful. We do make our mistakes. So, yes, it's all good. It's all good. So, love it, Brian. Love it. What's in store for the rest of the day for you, my friend? And you got to start, by the way, you got to start keeping track of all these things that we do. I know you kept the track of that. So write those ones down in your journal, in your Dumaresq journal.
Yeah, I will.
Okay.
Yeah.
And let's get that done. We got
actually.
Lowe's, we got Disney, and we got XLV. So let's keep those on the radar as well. Glad you like the analysis, Joseph, as well. Like I say, sometimes I'll be right, sometimes I'm wrong. But I can tell you right now, me, my guests, anyone who comes on this show, we're not afraid to put it out there. Because if we're wrong, so what? People are wrong every day. If we're wrong, we lose a little bit. If we're right, we make a ton. Bang. Love the formula. How's it goes? Sorry, buddy. What's on the plan for the rest of today for you, Mr. Dumaresq?
I actually have a couple of calls with some current students today.
Nice.
Want to clarify some things.
Yeah.
So that's going to pretty much occupy the rest of my afternoon.
Because you're working with the students ongoing as well as student mentors. And we don't talk a lot about this. And maybe next time you're on the show, we'll do this. But you're working with the students ongoing, aren't you? Because you have the coaches.
Oh, yeah.
I mean, like myself, coaching, doing the teaching, the sessions. But you're there with them on the phone, talking to them and helping them, right?
Yeah, well, you know, like we have a live coaching community, which is open 24 hours a day, 7 days a week. And when I log in the morning, sometimes I get a direct message to me saying, "Hey, Brian, can you give me a call today? I don't understand the Globex,
Right.
for example." Like, okay, so
Let me help you
I'll
with that,
say,
yeah.
okay, well, yeah, okay, I'll give you a call today at 2 o'clock Eastern time. You know, we'll get on a call for a half hour if you want to do a Zoom call so we could share a screen.
Nice.
Let's get on it and do it. And you know, that's what I do.
And
You
I think
know,
that's
and I'll
so
reach out.
important. So important in this world as well. People want to talk to other people, right? We want communication.
You know,
we need it after what we've been through the last year.
Another big thing that that I try to do is I try to reach out to all of our students at some point
Yep.
and just check in and say hello, because a lot of people, you know, trading's a lonely thing. And sometimes you really feel like you're by yourself.
Yes.
Where I want to reach out and say, "Hey, how are things going? Are you understanding everything? Do you need any help?" And things like that nature. And people actually really appreciate that, because support in this business is very important. Okay, because you don't know if you're looking at things the right way, especially if you're brand new. Am I looking at this right? Am I doing this right? What else can I be doing? And I have, you know, plenty of experience in this business where I could have these conversations and I could lead you down the right path. And if I don't have a question for you, I'll direct them to you or Ryan or Dan or Graham or whoever it may be, because maybe it's something that I don't 100% know or whatever it may be. But we're here to help you. Okay, everybody wants to trade for a reason. Okay, and if you're going to put your time into this, you want to make sure that you utilize your time, because time is the most valuable asset that we all have. Okay,
couldn't agree with you more on that.
Yeah,
absolutely.
So like I said, you know, I do my best to work with all of our students. If they have any questions, I do my best to answer them within a reasonable amount of time, which is, you know, within, well, with today's day and age with you know, social media and everything, it's like an hour. But realistically, you know, I try to get a little bit more. But yeah, you know, I really try to help people out. And that's how I actually feel good about myself, is by helping people, you know, and this is why I love my job and what I do.
Oh, it's awesome. And it comes across it really does. It comes across in droves, man. It's awesome. It's great to work with you, and, you know, great to work with the students too. You know, we need more of this, especially during the uncertain times that we live in. While everything does look good on the surface, there's a few things that are very concerning. Maybe that should be the subject of our next show that we do together, Brian. Is, you know, what is underneath the surface? You know, what is underneath the surface? Because it definitely feels like it. Brian, I'm going to catch up with you in just a little bit. I'm going to let you go right now as well. Thank you, as always, for being a guest on the show. Love having you on the show. We appreciate you. I appreciate you. TakeStock Live appreciates you. And more importantly, so does all the StockAbility community. Thanks, my friend. Thank you.
All right. Have a good day, everybody. See you later.
Thank you. Ladies and gentlemen, that was Mr. Brian Dumaresq, Student Momentum Coach at StockAbility, joining us on the show. Always great to have him on the show, and I just love his banner. He is my official co-host now. He loves that, and never ever a loss for words when I'm co-hosting the show with Brian. Guys, that was a show, The Traps of Technical Analysis. I hope you got something from that. Hope that helped. Again, always trying to kind of give out some little nuggets of things that are going to help you on this trading journey that literally we all go through and have to go through, and can be a very daunting one as well. We try to make it fun. We might try to make it accessible. And at StockAbility, go check us out. If you're struggling, not know where to go, reach out to us. Let us know. We are here to help. There might be just one little missing thing that you need that we can help you with. We'll have a chat with you. And if not, we shake hands. We go find out what can help you, but we're around if you need us. I'd love to welcome you to the community. Just even have a chat and see what it's all about. We're around. And also, I will be here next week. Next week is a special edition of the show. It's the beachfront edition. Yes, I'm on vacation next week. Going to be on the beach. I'm not going to actually do the show from the beach, but I might do it from the balcony, okay? Or at least kind of in the holiday setting. So no fancy studio, just me, a computer, and a live stream across Facebook and YouTube. That's what it's going to be. Maybe I'll even get some trading in at the same time. Going to be a special edition. Join live from the beach. Hope you can join me. And again, in the meantime, have a wonderful rest of your week. Enjoy the rest of your trading day. Stay safe. Be well. Be happy, more importantly. My name's Sam Evans. This has been Take Stock Live, brought to you by StockAbility. And every Thursday, we are here on Facebook Live at 12 noon and streaming also live at 12 noon on the StockAbility channel of YouTube. Guys, I'll see you next week. Have a good one.